JPMorgan, 276, looks like it was below expectations of $2.88. The revenue number, we were looking for 31.9, and I saw it earlier. Did you see the revenue numbers about? Initially, I thought it was below, but did I see 32? No, it is below. 30.7 is the revenue number. We're looking for 31.9. A lot of things that we're going to go into the weeds on: loan growth, credit quality. Jamie Dimon, when was that? Was it a month ago? He said there's what word did he use? Hurricane?
Yeah, hurricane. He said it could be like Sandy, or it could be something less.
The stock is not responding very well at this point. Right. The Dow component down 5%. So you probably see the Dow get worse, which we are seeing. That Dow's down about 429 points. Right now. So CEO Jamie Dimon says high inflation, waning consumer confidence, other factors will have negative consequences on the global economy. Sometimes down the road, Dimon says that the bank temporarily suspended share buybacks will allow it maximum flexibility to best serve customers, clients, and community through a broad range of economic environments. Joining us now with immediate reaction to the numbers is Cameron Dawson, Chief Investment Officer at Newedge Wealth. And loan growth was something, Cameron, that you said would be important. Just looking at it, and it's, you've had no more time than we've had to look at these numbers. What are the highlights that you see?
Yeah, that loan growth is really important, and it looks like it came in at about 7% growth for the quarter for JPMorgan. And that looks pretty light, because if we look at the H8 data that the Federal Reserve releases through the quarter, we typically saw double-digit loan growth on a national basis. And it was pretty broad-based between commercial, industrial, real estate, consumer. And so for JPMorgan to present just a high single-digit number shows that they tended to underperform the industry on this. And it's not just about this quarter, it's what comes next for loan growth, because as interest rates move higher and as there's more economic uncertainty, do we see borrowers start to dial back on the borrowing that they do? And does loan growth decelerate even more? So that's what we'll be listening for in the earnings call.
What are the other most important things that give us a look at the inflation picture, whether we're heading for a recession, all the other things that we're worried about macro? What can we look at for JPMorgan to give us an idea of how to gauge that?
Yeah, the reserve build is important, because now that the banks are under these CECL rules, they have to do more reserves for the life of the loan, the risk of the life of the loan. So as we see reserves start to build, that will be an important indicator of how much risk that they see. We also see them pausing the share buybacks, which tells us that they're having to reserve that capital instead of returning it to shareholders to put it into reserves. And then it's the question of commentary from Jamie Dimon about that hurricane and the magnitude of it. And it does look, based on this quarter, that these are the outer bands of that hurricane starting to come in.
The revenue number that we just showed is not, you always do see different revenue numbers that the company shows, so it didn't miss by that much at this point. The estimates have been coming down, Cameron, and this is still below even the revised estimates. Do we think that that's going to be the case with the banks that are still set to report?
Well, if we look at the components of the revenue numbers in a first look, it looked like some of the trading numbers were strong. So other banks that have more trading revenue could actually be a little bit more supported. We'll look more deeply to see where the source of the revenue miss was. But a lot of people expected that trading could actually come in better than expected this quarter because of all the volatility that we've seen in the FIC business. So fixed income, commodities, and currencies, that helps. But on the investment banking side, that's really the offset, because we've seen a lot less activity in the investment banks. High yield issuance is down 75% year to date. IPOs are down 90% year to date. That explains the revenue miss that we saw out of the investment banking line from JPMorgan.
The company is, Jamie Dimon says, share buybacks are going to be temporarily suspended to maintain maximum flexibility to quickly meet higher requirements. And the loan loss reserve did go up. So for
it goes back to thinking a storm is coming.
Right, but it doesn't look anything like Friday's jobs number. So there's such a weird economy we're in right now, Cameron. The jobs picture is so strong. Maybe that's pandemic related because not everyone's back, but there are definitely cracks in the notion that we're not going into a slowdown. There's things that don't look great.
Yeah, and jobs will lag, right? So jobs usually are a very backward-looking indicator. Companies usually take a lot of time before they actually get to the point of firing workers. If we look at that jobs data from Friday, we saw hours worked actually decline. So it could be an early indicator that employers are starting to cut back on hours before they actually get to firing. But it really gets to the point that the Fed's tightening of liquidity is immediately impacting financial markets. We're seeing this impact where interest rates have gone up, and so loan growth should start to slow pretty materially, but it takes time to work its way through to the real economy. But that's the challenge for markets today, because though markets might be pricing in a much weaker environment, the fundamental data is not bad enough to justify the Fed pivoting to become accommodative. And in the past, the Fed could become accommodative even when the market was freaking out, but the economy was still doing okay because inflation was benign. But based on yesterday's report, there's no end in sight to this very elevated inflation, which keeps the Fed backed into a corner and unable to support markets.
Well, Cameron, thanks. The stock looks like it's trying to bounce a little bit now. It's down 3% and change.